Hey, thanks for tuning in. This is a weekend review for the week ending February 10th, 2023. We're looking at a weekly chart of the S&P 500. Right now, I would say things look like they are improving. However, one thing to note, across everything that we look at, is we're really just in some big range. If you think about it, from the February announcement of the Russia-Ukraine war, that's basically where prices oscillated around. Maybe she comes all the way back up here to the top of the range. Again, she'd have to get above this box to start that. We got a gap up here. She's consolidating in a bull flag structure in an uptrend. If you really want to zoom out and look at the big picture, long-term secular bull still in play. Reversion to mean, really the middle line here. The risk is we're going to the bottom of this channel. You'll know that if you get below last month's low of 377. 350. Again, I think you want to stay above this middle line in that bull scenario. And if you really zoom out to the quarterly, reversion to the middle of the band. Mean reversion at its best. Okay? And has the quarterly trend changed? No. We just had a low here. We set a high here. We can pull back all the way above the 219. Right now, though, the lower high pattern has been broken on the quarterly. Okay, so 418.31 versus 410.49. That is a change in character. You did have 1, 2, 3 consecutive quarters, 4 consecutive quarters with lower highs, and we've broken that trend. So that's kind of important. But also from a trend model standpoint, we do have the 510 bear cross and a test of the 10. So really what needs to happen this month, the month of February and the month of March, they have to close above really 410, 50. Let's move the ball around the horn. You see the same pattern across all the charts here. The quarterly high, right? Is this just a higher low in the uptrend? I mean, a very obvious uptrend. Certainly could be. Right at the bottom of the channel. 2 weekly closes above or at the 50. The problem is the 50 slope is down. So while the slope is down, you have to assume that there is a intermediate downtrend within a long-term secular uptrend. And it looks like accumulation at the weekly 200, accumulation at the monthly 40, bottom of this channel, PPO resets to the 0 line, ADX resets to a trough, and you essentially have, again, how I started this video with no trend. So you have to realize that it's not like the markets are breaking out here. Right? This is a linear regression downtrend. And the Qs don't have the golden cross like SPY did. So relatively weak on the Qs. Having said, a pullback to 292 would make a lot of sense. So that's something I'm watching for. But again, the slope of the 200 is starting to flatten out. This is still a long-term daily downtrend, weekly uptrend. And if you look at the daily, the slope of the 200 is down. This is how you know it's a long-term downtrend. Okay, let's look at the best. Right, the 200 over here is already flat. And what's this range look like? Range bound since July. really, if they're going to do anything, they got to get above this level. And you can see the volume profile here shows a big area of interest for market participants at 240 level. If it's lost, expect the 50 and the 200 to get tested, and that's fine. You just had this nice large move, and what you want to see is this to consolidate up here above really the 229 level while maintaining this long-term uptrend. And if you zoom out, you start to see the same picture here. 200, the 50's flattening out, 510 bull cross, 510 20 all straight up, which is telling you the short to intermediate term is definitely has flipped up within the context of a long-term bull trend. Same theme on all these charts. PPO resets to 0 from 21, which is extremely overbought. And if you look here, the same thing. Quarterly set a high, came back to the 20, did get the 510 bear cross. It's possible that's a trap. It's also possible that's a very big deal, as you haven't had one since 2010. So you got to watch this quarter very closely, because if they can't close above the previous quarter's high, and all these charts we're looking at, those are I gave you all the levels. You can pause the video and go look. Those are the levels where we need to see the bulls close above. And let's take a look at small caps. So same thing here with small caps. Set a high, pulled back for, in small caps case, 4 quarters, 5 quarters. Now we've broken above that 189.56 level. Monthly 20 is sloping down. 50 is sloping up. The weekly is sloping up. The 50 is flattening out. The 20 is sloping up. PPO above 0. ADX above 30. So this does look like trend mode. ADX is confirming some type of acceleration in trend. And again, as we've highlighted on every single chart we've looked at, this is all just range bound, and you can go back to that January level, and prices there has done nothing for 1 year. That is a fact. And if you look under the hood, a lot of things within IWM got crushed over that period of time. So there are advantages to owning just the ETFs. And as you zoom in, you see that she's broken her long-term downtrend, did get the bull cross, and could really pull all the way back to this line, this longer-term uptrend. Right, a low, a high, higher low, a higher high. Expect a higher low and another higher high. That would be perfectly normal because you're in an uptrend. And it's something that you have to take notice of. Set a high here, a higher low, a higher high, and then came and set a new low. Okay, so this is a new thing. We'll see if it's more healthy. I've given the structure as well on all these charts. It's either ABC up within the context of a downtrend, and this move will end 197 to 204. Could have already ended. Or it's something like this within a longer term secular bull, giving you one more impulsive move higher. Either way, we don't need to guess. We can just play it week by week and know that when the environment changes, so will the analysis. Right now, PPO is pointing up. It's above 0. ADX is above 30. This is a theme on all of these charts except QQQ. Okay. SMH, very strong. Above 38. Very strong. Okay. SPY, not as strong. So ranking them, you've got IWM, SMH, XLF is getting there, which is 10% of IWM. And so those are the 3 spaces you want to look to identify strength. we'll throw the ball around the horn at some of the other sectors. XLRE back to the 200 on the weekly. But again, you'll notice same thing everywhere on all these charts. Broke the higher low pattern. Are they pulling back? Can they close above last quarter's high? And you zoom into the monthly to see, well, what's that look like? We should just capture this 50. Weekly back to pretty much mean. So again, no trend. Go back to these same periods and you'll see that price has just been stuck in a big range ever since. XLRE though does not look particularly great. Consumer discretionary, 50 periods sloping down, 200 sloping up. This could get ugly. Need PPO to curl up some more, and you can notice the histogram is rounding, which you want to see, and that this is not a trend, right? As price is really stuck here between the May range, ADX is just winding down. Let's take a look at some of the more recessionary. IYK, so consumer staples, really just reverted to the monthly 20. If you look at this, still extremely strong going back to Q1 2020. I mean, it's hard to say this looks worse than tech, which is XLK, but they look identical to me. And how about healthcare? Pull back to the 10 on the quarter. Right? PPO straight down. So healthcare looks relatively weak to me. Will likely remain under pressure until she gets to the 200. And so the sectors that are more recessionary, IYK, IHF, aren't looking that well. Energy, which led the pack for a long time, still looks fine to me. Could be a distribution pattern, could also just be a triangle. All right, your ascending triangle. And this is all big, one big wave 4. And you will ultimately come up here to 116 as this bull market ends. Right now, I think we got one more leg up in all the indexes. I think that's what the charts are saying. They're showing trend mode across the board. And the alternatives, like the defensive sectors, aren't really telling me risk on. Like TLT, this is a long-term downtrend. The other stocks are in long-term uptrends. Okay, so that's the first thing. TLT is not telling me there's a flight to safety. Is there a flight to safety in gold? Maybe. So this is definitely one to watch. Just from a structure standpoint, did she just complete an ABC into a rising quarterly 20 within the context of an uptrend? And we get one more high, marginal high, just like we've had here. Is that possible? Or is this just another lower high? Lower high, lower high. Time will tell, but right now it certainly looks like gold could be a flight to safety. But really, until she breaks above this high here, 193, and stays above, it doesn't matter, right? Because this is a big cup and handle pattern, and the breakout is above these highs. And if you do get above these highs, the target's like 900 on GLD. No joke, 900. Conservative target would be like all these people want to make their money, 360. But bull flag pattern, yeah, like 900. So this is definitely one to watch. I think UUP had its day in the sun But this is still a strong uptrend on the quarterly. But look, ADX peaked. Okay, and you broke the quarterly uptrend, right? So low, higher low, higher low, higher low, higher low, higher low, lower low, close below, lower low inside. And we don't know where the dollar is going to end this quarter yet, but this is definitely one to watch, and we are below this pivot. Okay, so not a good look, and this is a reversal candle, big wicks. When you come back up to test those wicks, you expect to find more sellers. How much more? Basically the same amount as the first time. That's what I would expect from this. But again, that's just subjective. Objectively, you have a short-term downtrend on the weekly. You look at the monthly, you have the 5-10 bear cross on the monthly, and ADX has kind of reverted back to zero. So this move lower is against the trend. This is a counter trend move right now, by definition. And this is a pullback from 3 to 2. And each time we've seen a cross like this, you tend to get a correction. And it's that 5, 10, 10, 20 moving average cross that tends to identify and signal a trend. And this is certainly a break of an uptrend. Okay, so dollar not showing defensive anymore, just had some long-term monthly bear crosses. Gold is certainly showing a flight to safety, or could be in the process of a flight to safety, also could be putting in a lower high. So that's a much less clear asset class. And bonds are certainly in a long-term downtrend. So when you look at the ratios, equities to bonds still favoring equities, and it has since 2020. SPY to the dollar, equities to the dollar, is signaling risk on for equities. Back here, you got the sell signal at the start of 2022, favoring the dollar over equities. Now we have the buy signal to start 2023, favoring equities, right? So risk off, risk on. And when you look at this from a momentum standpoint, this is certainly an angle of attack and a configuration that can continue for a lot longer than most people think. Hence that phrase, the trend is your friend until the very end. And the market can remain irrational a lot longer than you can remain solvent. So, equities favored over the dollar. Equities favored over gold? Not exactly. And that 50 sloping down, 200 sloping up, got demand once, found sellers 4 times now, came back, got demand twice, now back up to where the sellers are. So this SPY to gold ratio is definitely one to watch. It could be A, B, C, D, E could just be contracting for some time before we get a break. But when this one breaks, it's going to signal either risk off to gold, which would be something that we haven't seen since 2020, 2021. Was all equities. All right. I think you probably have to go back to 2008, 2009 before they were heavily favored. And if you look at what's done best year to date, DADA, ACLS, NVIDIA, WRLD, SHOP, STX, WFRD, SDRL, and BTC. Those are kind of the top ones. Yeah, and so if your name's not at the top of this list, right, what are you doing? Like, this is how you outperform. You identify these guys who are up 60% in a month, 50% in a month, 40, 30, etc. You rank them, and then you start to have a leadership list that you can buy. Like, you got to buy the right stuff. You got to sell the right stuff. Like, the stuff at the bottom of the list you want to sell. Like, plus 9%. I mean, this is nothing to be happy about. You could be having things that are up 50%. You got to look at where the money's flowing and also notice that, look, these leaders, they all kind of peaked January 23rd, 26th, 27th, set lower highs here in February. And you can see this across the board. Right? So there's been a major pullback going on since January 23rd. And if you go look at the charts, what was SPY doing January 23rd? Right here. So SPY since then has gone up quite a bit more for quite a bit longer, but a lot of these underlying leaders aren't confirming that strength. Now, some of them are, like SHOP, but that February 2nd high, this one right here, most of the internals didn't make new highs. So you are seeing breadth deteriorate. And if you look at excessive optimism, it has remained. It definitely is here. And expect this to come back down. This excessive optimism composite from NDR Research. I think I recommend everyone follow them. But yeah, this is a lot of optimism. And when you have a lot of optimism, you expect there to be, if there's another high on these charts, you expect that to be sold. You expect a pullback of 50% of the recent move. And then from there, you know, like look, here's you could say this was the move. And you could say, all right, we need to correct 50% of that back down to 396. That's certainly in the cards on all these charts. It's also possible they come up here and set one more high, right? And then we start that 50% correction. And then we'd be pulling back to here or here. Maybe only 32, 38%, right? So the point is, these things have put in bearish divergences across the board, even in the leaders like NVIDIA. So the daily here has not, okay? But former leaders like Crocs, this is a bearish divergence that's maintained. Yes, you're pulling back to this uptrend, but you gotta take note that these things are pulling back into the rising 10, and that has happened here, not on SPY, right? So the internals are definitely not as strong as the as like some of the stocks that have been leading are not as strong as they used to be, like Crocs. And NVIDIA putting in potential weekly reversal, but still closed above the top of the Bollinger Band, right? So it's like, you know, if you look at what's in SMH, it's outperforming big time. If you look at what's in IWM, outperforming big time. And if you're not in that really in that list, you're kind of an outlier. So identifying strength is really what you got to do. NVIDIA here, looking to see if she comes into this box, the 219 to 238, or if she makes it up to 268. She makes it to the 1618, in my opinion. This is no longer a zigzag and is actually a new impulsive wave where you'd expect a challenge of this 350, 300 area. And if you look at the target for the inverse head and shoulders pattern, as long as she stays above 185s, the target is 350s, all-time highs. If you look at NVIDIA, this is a perfectly strong uptrend. And pullbacks to the 10 got bought, now pullbacks to the 20 got bought. There's nothing that says that this thing can't ride higher. There's nothing that says that. So we don't have a sell signal. We have a reversal candlestick. But this is above zero. ADX rising above 30. This is all trend mode. Buy the dip. Any pullbacks into 200, 186, strong buys. And it's definitely one I'm going to continue to watch. Crocs, did just pull back to the middle of this channel. We'll see if she can rally on earnings. So the bulls finally outnumbered the bears. AII sentiment poll. First time in 44 weeks. So you can see that the sentiment is definitely shifting. And at this point, you still get polls like this. Is the bear market over? 9,900 votes, 70% of them said no. If you look at the semiconductor performance ranked by stock, NVIDIA, so SMH is the strongest sector that I've been showing you. And these are the stocks that are in SMH, and you can see that NVIDIA is leading all of them. Okay, so I've done the due diligence. This is the largest stock in my portfolio. This has been NVIDIA going back to October. Volume breadth thrusts, right, where demand exceeds supply, where you've seen them in the past. Average return 1 month is 4%, 12 month out, 100% positive, 24 month out, 100% positive every single time. So, just keep in mind that it's been 100% positive 1, 3, 6, 12, and 24 months out. The signal that just triggered. Okay, so expect higher prices. Expect there to be pullbacks. That'll be perfectly healthy. Stocks don't suffer after periods of persistent pessimism. We've just had extremely high 44 weeks in a row of bears outnumbering the bulls, for example. And following these very high periods of pessimism, you tend to get very, good runs in the market. As we ran through earlier, the dollar, bonds, gold, and commodities, those ratios versus equities. Equities are winning across the board except gold. Percentage of SPX components trading above their respective 200 has revisited levels from November 2021. That's a positive sign of breadth. And this is what we mentioned earlier. Excessive optimism is in the air, also from NDR. So they're saying, yes, we expect a pullback. Yes, we expect that pullback to get bought. And we got this Zahorkak, -10 to +10, breadth thrust. This is a really, really good one. Go check it out. BINYZM2DW on stockcharts.com. It's had one fail going back to 1990. And it has confirmed all but one cyclical bottom since 1982. And you can read more here. Plug that into Google. And that's all I got. If you like the content, hit the like button, subscribe to the channel. I'll see you next week.